Here are the crypto top headlines covered in this video. Ripple's XRP market value primed for mysterious shakeup as whale holdings go through the roof. Next, the SEC continues to engage in strategic ambiguity, lawyer says. Also, Genesis completes restructuring and commences distributions to creditors. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Ripple's XRP market value primed for mysterious shakeup as whale holdings go through the roof. XRP has been on the right footing for the past few weeks since the 8th largest cryptocurrency has witnessed a notable leg up. For instance, according to CoinGecko data, XRP has increased 36.9% in the past 2 weeks to hit 60 cents. Sentiment acknowledged that heightened shark and whale holdings were instrumental in enabling XRP to scale heights, with the altcoin hitting a 15-week high. The leading on-chain metrics provider pointed out XRP has now climbed above 58 cents for the first time since the market-wide retrace back on April 12th. This rebound is supported by climbing levels of coin hodling from whales and sharks with 100,000 plus XRP coins. Therefore, the heightened accumulation spree among whales and sharks paints a bullish XRP picture since the coins are being held for future purposes other than speculation. Is XRP gearing up for a major breakout? According to Crypto Michael, as XRP continues to make airwaves in the crypto sphere, the altcoin might be getting ready for a historic breakout. The market analyst acknowledged, "In all my years of trading crypto, I have never seen a 7-year-long bull pennant. We might be about to witness one of the most significant breakouts in crypto history." Based on this trend, XRP might surge to the psychological price of $2 if this breakout sees the light of day. Technical analysis also shows that XRP intends to leave a major symmetrical triangle, further cementing the crypto's bullish journey. As XRP continues to attract a crazy bullish crowd sentiment, the monthly RSI is also eyeing exiting a notable 6.5-year downtrend. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, the SEC continues to engage in strategic ambiguity, lawyer says. 2 NFT artists filed a suit against the SEC earlier this week to push back on the unclear regulatory approach to the environment. Earlier this week, 2 NFT artists decided to take the lack of regulatory clarity over their medium to court. Jonathan Mann and Brian Fry sued the Securities and Exchange Commission. In a Louisiana court filing, they argue that artists like Andy Warhol and Georgia O'Keeffe never had to worry about regulators claiming their art constituted investment contracts. It would be crazy to think that Bob Dylan, Janis Joplin, the Rolling Stones, Ray Charles, Jimi Hendrix, Madonna, or Louisiana's own Louis Armstrong should have retained attorneys to examine the SEC's Form S-1 to see how to register their music for sale to the general public, the complaint said. Mann told Blockworks that the suit was born from deep frustration with the lack of clarity. The regulator agency's anti-crypto parade has already targeted 2 NFT projects, Stoner Cats and Impact Theory, and Mann felt that his NFT collection could follow in Stoner Cat's footsteps. The goal for the artists is simple: get some answers from the SEC and act before the agency can take action against the 2 of them for their projects. Mann, the artist behind A Song a Day Man, writes and releases a song a day and has done so for 16 years. He told Blockworks that he has been involved in the NFT space since 2017, way before the 2021 boom that probably put such things on the SEC's radar. His project has penned multiple songs about the SEC, including one earlier this week detailing his plans to sue the SEC, and one from September of last year about the SEC's actions against stoner cats. Last year, the Mila Kunis and Ashton Kutcher-backed project paid $1 million to settle with the SEC and destroyed NFTs in its possession. As I looked at what they said stoner cats had done, and I looked at what I continually do on a daily basis, I realized there's no daylight here between what they're accusing them of and what I do, and basically everyone that I know in the space, artists and creators of all kinds, are doing all the time, Mann told Blockworks. Mann said the SEC's actions could deter artists from seeking a direct relationship with clientele. It's very ironic to me because in a lot of ways, I think of NFTs as the most direct relationship that I can have with people who enjoy my music. Any other way that I could sell songs to folks would be mediated in one way or another by either a giant tech company or a payment processor who would take a cut, he said. I would have to interact with these huge multinational corporations, but when I'm selling NFTs, it's literally just me and them, mediated by the blockchain which belongs to no one. I find it ironic, like this way of interacting with my fans is somehow deemed more harmful by the SEC than you know what Spotify does to artists or YouTube does to creators or TikTok or any of these things where creators are just screwed at every turn, and yet that's just deemed normal, Mann continued. Jason Gottlieb, who also represented Debtbox in its now infamous case, was brought on to help Fry and Mann argue their case against securities regulator. The SEC has been engaged in strategic ambiguity, Gottlieb said, leaving artists with two options: take action against the agency itself after it didn't respond to requests for clarity on its regulatory stance, or produce their art and risk that they wake up needing to hire very expensive securities lawyers. Of course, the easy way not to cower in fear of getting sued by the SEC is just to follow all the securities laws, but those laws apply to people who are in the securities or investments business, and not it should apply to musicians and artists, Gottlieb continued. He noted that there have been a number of cases brought against the SEC due to the mounting frustration within crypto. Indeed, it's a heavily discussed topic, even going so far as being an important talking point in Coinbase's earnings call late Thursday. As we go into this new digital era, where most assets with value are digital, and most assets that don't have intrinsic value but have artistic value or digital, there's a question of how, if at all, they should be regulated, Gottlieb told Blockworks. So my interest in digital assets and the SEC and securities law is intersecting here along with protecting the next generation of creators, designers, musicians, and artists to help them make digital art free from concerns that all of a sudden some random federal agency tasked with regulating securities and exchanges is going to show up and say, "Hey, that song you're trying to sell, that's a security," he explained. Our next top headline: Genesis completes restructuring and commences distributions to creditors. Genesis Global Holdco, Genesis Global Capital, and Genesis Asia Pacific today announced the completion of its restructuring on August 2, 2024, the effective date. Genesis has commenced making approximately $4 billion in distributions of digital assets and U.S. dollars to creditors pursuant to the Chapter 11 plan, called the Plan. Unlike many bankruptcy cases, the plan does not seek to cap recoveries at petition date value. As part of the initial distribution, creditors will receive on average 64% recoveries on an in-kind, coin-by-coin basis as described below. On the effective date, BTC creditors will receive 51.28% recoveries as valued on an in-kind basis in the form of BTC, and ETH creditors will receive 65.87% recoveries as valued on an in-kind basis in the form of ETH. As soon as practical after the effective date, altcoin creditors other than Solana will receive on average 87.65% recoveries as valued on an in-kind basis, and Solana creditors will receive 29.58% recoveries as valued on an in-kind basis. On the effective date, US dollar stablecoin creditors will receive 100% recoveries on an in-kind basis in the form of US dollars. Creditors will be entitled to additional recoveries following the initial distribution depending on the results of ongoing claims, reconciliation, contractual rights against third parties, and litigation. Creditors have been contacted with instructions on how to receive distributions in digital assets and US dollars. For questions with respect to distributions, creditors can contact distributions@genesisholdco.com. As part of the plan, creditors have established a $70 million litigation fund to pursue causes of action against various third parties, including Digital Currency Group, which is Genesis' corporate parent. The $70 million litigation fund will consist of $26 million in BTC, $13 million in ETH, and $31 million in USD. Counsel to the Litigation Oversight Committee has not been selected but will be shortly. Mark Renzi, a managing director at BRG, has been appointed as the plan administrator to oversee the administration of the plan and the company's wind-down process. Pursuant to the plan, a new board of GGH has been appointed, along with the Wind-Down Oversight Committee and the Litigation Oversight Committee. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.